Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Friday, August 13, 2010. While we saw a good amount of data come out today, the overall theme to end the week was the euro extending its losses as persistent concerns about the slowing economic growth reduced demand for riskier assets. The euro rose overnight on the back of some strong second quarter GDP data, but that wasn't enough to temper the sense of risk aversion, and investors filed into the dollar and the yen, traditional safe harbors, to end the week. The pair breached a fresh 3-week low, reaching its low at 1.2750 prior to the market's close. That GDP data showed Eurozone growth rising 1% for the second quarter. This was the preliminary version or the first reading of second quarter GDP, while Germany's economy posted a strong 2.2% increase, both compared to the first quarter. Both these figures were better than the forecast. The problem is that this may be the peak for the Eurozone as austerity measures will begin to bite in the upcoming quarters as countries cut spending in order to trim their budget deficits. The euro was pressured against its main European rival, the pound, extending losses from Wednesday's session when we saw it slide sharply, and in today we broke below the 0.82 level, hitting a 6-week low at 0.8177. Earlier in the week, we had disappointing Eurozone industrial production data as well as dismal Greek GDP data, along with concerns about creditworthiness of Irish banks, which have weighed on the euro in these recent sessions. Lackluster demand at an Italian government bond auction on Friday, and reports from the Bank of Spain that Spanish banks increased their funding from the ECB in July further deteriorated sentiment towards the euro. The inability of the euro to rally on its good GDP data was also another bad sign and could mean further losses in next week. Looking at the euro's safe haven rival in Europe, the Swiss Franc, here too we saw the rally in the Asian session peter out at around 1.3540, and then we had an extension of the declines we had seen during the last two sessions when the pair fell very sharply, undoing all the gains in favor of the euro we had seen throughout late July and all of August. Switching to the dollar-yen pair, here we saw the dollar also advancing against the yen as it did against the euro, and it moved above the 86 level, our resistance level overnight, on speculation that the Japanese government is getting serious about combating yen strength. The rise in the pair happened on reports that Japanese Prime Minister Naoto Kan and Bank of Japan Governor Shirakawa may meet next week to exchange views on the yen's recent appreciation and ways to deal with it. We also had some reports coming out of the U.S. Sales at U.S. retailers increased 0.4% in July, which was the first increase in 2 months, but much of that seasonally adjusted increase reflected higher gasoline prices. Gasoline sales jumped 2.3% last month, while motor vehicle sales rose 1.6%. Excluding autos, retail sales rose 0.2%. Excluding both gas and autos, sales fell 0.1% on the month, which was a second drop in the past 3 months. Consumer confidence, meanwhile, as measured by a Reuters University of Michigan preliminary poll, improved to 69.6 in August from 67.8 in July. That is still near 8-month lows. Consumer pessimism is largely tied to the 9.5% unemployment rate and an economy whose growth appears to be petering out. Third, we had the index for U.S. consumer prices come out, and we saw it rise 0.3% in July, which it pulled up by energy prices, on the year, prices were up 1.2%. The core rate, which excludes volatile food and energy prices, rose a tepid 0.1% in July, while the annual rate remained at 0.9%. Therefore, the U.S. data, see the CPI, retail sales, and consumer sentiment, all showed slight increases, but mainly in line with economists' expectations. The reports, however, failed to give investors any reason to reconsider their generally pessimistic outlook on the U.S. economy. Stocks in the U.S., for the most part, treaded water, ending close to flat for the day. Now let's take a look at key releases for next week. First we'll start with the US, where Monday we start with the TIC long-term treasury flows, as well as the Empire Manufacturing Index. Tuesday we get data on producer prices, housing starts and building permits, as well as industrial production. Thursday we finish off with Philly Fed Index, as well as weekly jobless claims. Around the world on Sunday we're going to get GDP data from Japan, UK consumer prices, Germany's ZW economic sentiment, and the Bank of England inflation report on Tuesday. Wednesday, we get producer price data from New Zealand. Thursday, another important release from the UK in the form of retail sales. And we finish the week off with Canadian consumer prices on Friday. And that will wrap up our coverage of the Forex market for this week. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you a great weekend.